Welcome to the Strategic Insight Global Research Update. My name is Daniel Enskat. I'm the head of global consulting for Strategic Insight, here with Lise Carpenter, who normally is in Hong Kong. She's a senior research analyst based in Hong Kong, but at the moment in New York. Lise, we recently wrote a spotlight on Switzerland. Why did we pick Switzerland?
Well, there are a couple interesting reasons for why we decided to pick Switzerland. It has received a lot of media attention since the financial crisis. There are a lot of regulatory changes coming up as well, and it is known as a private banking hub. And the Swiss fund industry itself is not insignificant. It's close to $750 billion in total assets.
We'll touch on all of that. So it being a hub, a product leading market with the private banking industry, and what has happened since the crisis. Let's start with the industry itself. There are a couple of meaningful difference from the rest of Europe or the world in terms of flows that we've noted to Switzerland before, during and after the crisis. What stood out most from a flow perspective in recent years?
Well, since the crisis, there's been a bit of a dip, like in other markets, in flows to equity funds. However, it's regained much more quickly than equity funds in other markets, where from 2008 through Q1 2011, net flows to equity funds were close to 60% out of all long-term asset classes. However, more interestingly is that this did not go to actively managed products. Most of this went instead to passive funds.
Which is, well, let's start first with the asset base. So equity funds in Switzerland from 2008, from the dip there, regained 75%. So there has been 75% growth in equity assets since then. And Switzerland is one of the only markets that had positive flows to equities in 2007, 8, 9, 10, and 11. So before and during the crisis, there were still positive flows, mostly though to passive funds, which is the use of passive funds in the industry is growing, but in different shapes and forms, in advisory solutions or in targeting specific niche areas through an ETF or an index fund. We'll touch on that in a minute. So Switzerland really gives you a couple of trends that you then see in the rest of the world as well. Another trend that we should touch on is the use of funds instead of separately managed accounts by institutions. What did we find there?
Well, since 2005, we've seen the number of institutional mutual funds and share classes triple. Now, total assets in those are up to close to $200 billion. And we've seen this trend as well, where institutions are switching from managed accounts to fund vehicles instead, not just in Switzerland, but also outside.
Which is good for the fund industry. So the fund industry, and that's not new in itself, but what is new, that institutions are packaging solutions for smaller and mid-sized institutions into a fund. So we have seen hundreds of funds being launched, specific portfolios being launched for institutional funds, and as well share classes. So we've seen the tripling of the number of share classes, institutional share classes, in Switzerland alone. And that's really a global trend, but it's very meaningful, or it's very visible in Switzerland. And it's something that has picked up since 2004-05, when the big firms like UBS and Credit Suisse and others started to do that. That's actually, I guess, leads us into the structure of the industry itself. Not surprisingly, you have about 80–85% of the assets in the top 10 managers, the big banks and the big private banks. Now, what have we seen for those firms since the crisis in terms of gains and losses?
Those firms mainly, since the crisis, have seen growth in their private banking businesses, in coming more so from Asia and emerging markets versus Europe and the rest of the world. So
one of our meta trends, and you know we talked about this a lot in our research, the whole trend from west to east is very visible for most of the private banks. We have a couple of examples. What kind of case studies do we have in the report?
In the report, we look at firms such as Credit Suisse, UBS, and Julius Baer, closely at their businesses. And more specifically, we look for these, so for the larger private banks as well as the smaller private banks, we look at the breakdown of assets. So what switched
between 2008, 9, 10. And if you also, a couple of days ago, noted that the World Wealth Report, an annual report by Capgemini and Merrill Lynch came out, the overall global trend is the same. Asia Pacific high net worth investors are now second right behind North America, so they surpassed Europe, and that's actually also visible what we have seen with the private banks in Switzerland. Their business in Europe and in Switzerland declined, while there was a huge pickup in the Asia Pacific business. As a result, they invest a lot in these areas. Now, is the west to east the only trend, or what else are we looking at there?
We're seeing the opposite trend as well, where firms are in Asia are going from east to west. Now, most large Chinese banks at least have presence in Hong Kong. For example, a firm like BOC has gone a little bit further than that and has presence in Geneva, where they market themselves as a truly Swiss firm servicing private investors and institutions.
Well, it's a curious case, in effect. So what they did is Bank of China went to Geneva, lifted out a ultra high net worth advisory team and portfolio management team from Lombard Odier, and is now selling renminbi products into the Swiss private banking market using their distribution from Chinese investors. So this spotlight on Switzerland really is quite broad. To summarize, we have the trend of equity fund flows really contributing in Switzerland to the business. We have the passive fund trend, so ETFs and index funds picking up and contributing a large portion both on the equity and bond side. Then institutions are using more mutual funds away from separately managed account. That's a larger trend worldwide. And then most importantly, on the private banking side, which often is an indicator of future product needs and considerations, there has been a decrease of revenues from European markets and a big pickup in Asia Pacific. Thus, both the smaller and the bigger private banks are heavily investing, buying firms and investing in new talent and new offices. On the other hand, you have also Eastern managers going into Europe, seeing an opportunity there. So the spotlight on Switzerland highlights a lot of industry trends. We will touch on those in future updates. Thank you for watching the Strategic Insight Global Research Update.